After a week plagued with worry and concern over the latest when it comes to inflation, I'm here to share with all of you that there are some top-notch dividend stocks out there trading at some very nice discounts to quell all of your nerves. 3 of which we're going to go ahead and run through now. So over the last few of trading days, market participants have been on edge, awaiting the latest inflationary report, which I'm going to speak to more about in this upcoming Sunday's video, so be sure you're subscribed to the channel to be reminded. Anyhow, all the hearsay sparked some volatility. As we can see, we've been ebbing and flowing in the red. Now, red days are in fact buy days for me, and I want you in on all of the latest gold find opportunities out there. So let's run through 3 dividend stocks, CNBC 3-stock lunch style together, and from there you can go ahead and double down on those positions if they're suitable for your portfolio. Now, the very first stock I want to talk about today is AbbVie, ticker symbol ABBV, which is a pharmaceutical behemoth ranked as one of the world's largest biomedical companies by revenue, with its primary blockbuster drug being Humira, a name that if your head is in the healthcare industry and quite frequently you're probably well aware of. Recently, however, AbbVie's stock share price slid after revised guidance, ultimately reflecting very unfavorable earnings to come. That revision sparked the biggest intraday decline in more than 5 months for the company, whereas AbbVie as of right now is trading for $169 per share. That's down by 4.3% on the week, though it remains up on the year by about 10.6%. If we zoom out, we can actually see that AbbVie makes a heck of an investment with over 442% worth of growth over the last decade. I'd like to say it pays to be in the drug business, and quite well. Analysts agree with upside expected, as the forecasted share price is coming in at $181.22 per share. Not to mention hedge funds have certainly been making moves on AbbVie, scoring more than 208,000 shares worth last quarter. But as a dividend investor, your drug of choice, that dividend, will come in at a yield of 3.65%, and quite reliably too, after 100 years worth of a dividend streak, while growing by about 14% on average year over year. Next up, perhaps in the opposite direction of health, I want to go ahead and talk about one stock that's been faltering rather recently, McDonald's, ticker symbol MCD. As of this video, McDonald's is trading for only $267 per share, PE ratio coming in lower for the company at 23.1, and zooming out, we can see that overall in the year we're down by 9.25%, thanks to all of the macroeconomic factors that get rather political and in my opinion are rubbish, because we're looking at a business that just continues to shine. However, in more optimistic news, a recent Krispy Kreme partnership was announced, and I only see growth well into the future for McDonald's. After all, we do see about a decade's worth of growth here, 247+% worth of it. Now, analysts are also quite optimistic, coming back up about 21% worth of growth to $326.32 per share, along with smart money moves that have been made last quarter with this fast food juggernaut, 272,000 plus shares purchased last quarter. But we are here, of course, for the McDividends that remain safe thanks to the strong burger demand and just overall health of the company. So we can enjoy a 2.5% dividend yield that's been untouched for the last 47 years and growing on average by about 15% year over year. Now, investors, if you're really looking for quite a steal, I'm telling you there's a one-off opportunity presenting itself. But before I actually cover it, take action. Massive action today, not necessarily by buying these stocks, but ensuring you never actually miss dividend stock ideas like these by subscribing to the channel. And while you're at it, I want you to actually tell me if this is the content that you came here for or if you're getting value from it. That's all you have to do is tap on that thumbs up button to let me know. Last but not least, I'm starting a book club, our book of the month, The Bezos Blueprint. I want all of you reading it with me and leveling up this month. There's more info in the pinned comment below. But as for this last dividend stock opportunity, let's get to it here with United Health, ticker symbol UNH. It is one of the largest, if not the largest, insurance and service provider within the United States that recently tanked, very likely due to the culmination of factors from recent cyber attacks, the Medicare Advantage rate cut, as well as antitrust probes, but all of which is making an incredible buying opportunity. I mean, a buying frenzy on this dividend gem, now down by over 13% in the year, trading for just $456 per share, PE ratio at 20.5. But zooming out with me, we could see over 571% worth of growth over the last decade, and continued confidence from analysts in United Health, coming up to a projected share price here of $599.14 per share. It's a whopping 31+% worth of upside. And until then, we're going to get to capture a solid dividend that's also growing here, coming in at a 1.65% dividend yield while on a dividend streak for the last 31 years. Yeah, check this out, growing by over 41% year over year for the last 20 years. Now, with that, investors, let me know your thoughts on these dividend stocks in the comments below. Discover more insights right here, or just subscribe to the channel now to be a part of this financial freedom journey.